Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. I'm Sunanda Jaiseelan, and if it matters to you, it matters to us, and we cover everything and anything that is of relevance to you. All of this week, we're continuing to put the spotlight on the field of education. What has changed? Why has it changed? And how can you as a student and how can you as an entrepreneur prepare for some of the changes, especially those brought on by the pandemic? Even as we're seeing a lot of schools reopening, we're seeing students heading off for international courses. All of that we will cover on the show today. We're also getting our experts to answer questions on taking student loans. Should you not? What should you keep in mind? All of that on today's panel. Let's dive right in then and introduce our guests. First up, Rishabh Mehta, founder CEO GrayQuest, Sunit Gajbhiye, co-founder, Chief Business Officer, Financepeer. Thank you so much, Rishabh, Sunit, for joining us here on the show. If I can ask the two of you, Sunit first, Rishabh, if you could go next, and just very briefly for the benefit of our viewers, to talk about your business model and what it is you do.
Financepeer is a platform which focuses on fee financing for education. When I say that, essentially the vision that Financepeer has today, so I have a daughter. Today she is going to school. Tomorrow she'll be doing her college. Similar to that, students just don't stop there. She would have a guitar class, she would have maybe a dance class, a football class, and then going forward, eventually she may also go abroad to maybe do her MS or whatever she wishes to do. But all of this needs money. In education, the good part is that education in India, the quality is now increasing. From the day when I did my schooling, the fees at that time was about 16 rupees is what I remember. And now it's very, very different. So that is the vision that Financepeer has, that every child, every student in our country, they have the dream, they fulfill the dream of whatever they want to learn, whatever they wish to be. And Financepeer is there to ensure that money is not a problem for them.
Rishabh?
So GrayQuest is effectively, working in the education ecosystem across the country today. Our effect, one point that we have noticed, we've been operational for the last 3 to 4 years. One point that we have noticed, and Sunit actually emphasized on that point himself, Indian families, they are extremely aspirational about their children's education, right? An average Indian family on our platform is spending almost 24% of their annual household income on their children's education, right? They want to aspire for the best quality of education for their children. And effectively what we realized at GrayQuest, what we can do is enable them to pursue that best quality education for their children by making it convenient, affordable, and accessible for them to pay for that education, right? So what we effectively do is we partner with some of India's leading educational institutions. We tell them that, we will create a monthly payment option for their parents and students. And for all these parents and students, if they choose to pay via GrayQuest, they can pay their fees in easy, convenient monthly payments throughout the year rather than a lump sum payment. It just makes it a very attractive form of, more attractive, more convenient, more accessible for them to pay for this education, right? And we typically do it at zero extra cost to the parent or the student, right? Since 2017, GrayQuest was launched. Today, we're working with almost 3,000 education institutions. Most of the leading, schools, colleges, and tech companies across these sectors are working with us. And we're, aiming to grow our, coverage exponentially in the next 2 to 3 years.
Rishabh, if you could talk about how one applies for goes about the entire process of applying for a student loan. It was initially presumed that when you say applying for an education loan, you're talking about higher education, but primary education has gotten expensive as well as we speak, like Sunit was mentioning. So what is the process? Is there a simple process that you could run us through?
The best process that would pretty much cover all scenarios is to, speak with your education institution and see and discuss with them that when it comes to fee payments, what other options do they have, right? Every education institution in the country will give all their students and parents an option or some sort of an installment structure to pay their fee, right? And when you speak to that education institution, they will always have some of the other financial institutions or fintech companies that have empaneled with them, which will provide a more affordable, more accessible financing option to pay for that same education course, depending on which course or which college or which school you're speaking about, right? When it comes to higher education overseas, there are certain fintech companies and financing companies that are enabling just or focusing just on that subsector. But when it comes to an Indian domestic institution, according to me, the best bet is to speak to that education institution, and they will refer you to the to companies that are already empaneled with them, and it'll be much more smoother for a customer to take a financing option via that company.
Sunit, what kind of expenses does a student loan typically cover? What does it not? Anything you can tell us?
So yes, to add on to even what Rishabh was talking about, what Financepeer, GrayQuest, and a few other companies, the impact that they're doing today, uh, student loan as a stigma in our country. Traditionally, a loan is where I approach a bank and I pledge maybe either my mortgage or I pledge a certain security. There is a certain interest rate that I have to repay that loan in. Right? So this is a student loan in our country. What companies like Financepeer today are doing is that, and hence we are calling it as fee financing. Uh, so when it comes to a preschool or even a school, the parents, there is an existing stigma in our society. Right? All of us as parents, it's not that at times we may face a cash crunch, at times we do need a loan. So loan, yes, is need based. But when we talk about fee financing, what we are looking at is convenience of payment. So there is a slight difference in a student loan versus fee financing. The first and the biggest difference being a student loan is 100% interest based, which means there is I have to give back the money plus I have to give back the interest for my daughter. Fee financing, I think there is the biggest difference because it is zero cost. Of course, the question comes who bears the cost? That definitely we'll touch upon that. But zero cost means if I'm paying, let's say, a lakh for the school for my daughter, I now have an option of paying 10,000 for 10 months flat. There's not even a single rupee more that I need to pay. So, hence, this as a market itself started evolving 3 or 4 years back when Financepeer worked with its first institution. And that is the difference that we are talking about. So a student loan deals with a student, let's say a college or a school, going for a need-based financing. It is part of a personal loan where there is certain interest depending on the pedigree of the institution the student is working with, depending on the security that the student pledges. Then there is processing fee. Then there is a large number of documentation and validation. And not just that the process being tedious, but the amount of time to get that loan ranges from anywhere in between 2 weeks and it can go up to 3 months also, depending on the size of the loan. Vis-a-vis fee financing of what we are trying to do today is something that it's complete minimal documentation as a process where a student is applying. There is no interest. It's complete transparency that 1 lakh is what your fees are for a year. This is what you're going to pay. Not even a single rupee more is going to go from you. And on top of it, there will be a lot of things more that can be done, which is not in a student loan. For example, ensuring the education, rewards, and new learning courses.
I have to take a quick break on that note. We're back in just a moment. Welcome back with us here on Leaders of Tomorrow. Tonight, we're continuing our week-long special series on education, talking about the changes that we've been seeing as a country and also what is happening when it comes to the field of applying for educational loans. All of that with our experts tonight. Rishabh, what about the profile of the people who are applying for these education loans? Is it, as simplified a view as to say students who are going to, universities abroad, students who are going to schools which are, say, private schools, they're the ones whose parents perhaps, or they themselves perhaps are the ones who are applying for these loans? Or are parents who are, not in, say, socioeconomic class A or B, are they the ones also applying for loans? And are they perhaps, approaching taking loans for education very differently compared to others? Or is it, a very sort of broad brush when we're talking about who's applying for these loans?
Yeah, great. I think that's a great question, Sunanda. So one way to, categorize this would be in, let's look at one segment, which is school fees in India, right? It's one of the world's largest ecosystems in the world, simply because India, unlike any other global economy, has a very, very large share of private education. Now, you mentioned that, are people across the socioeconomic spectrum looking at this education expenditure in a similar way? One thing that I
Okay.
can definitely, and we have seen this, every Indian is extremely
Okay.
aspirational about spending for their children's education, right?
Okay.
And just to give you context, right, what does the
Okay.
socioeconomic pyramid look like? Let's say
Sure.
if we speak about schools, at the bottom layer, I would put, there are government schools and public schools which are free of cost for the vast majority of the population, right? One level above that,
Okay.
is something that we would call as the entry level private schools, budget schools, right? Now, just between these two categories, what I have realized is the minute an Indian household or an Indian family starts earning disposable income, which, where they can, take care of their food and shelter, the first thing that they will invest in is move their child from a government school to a private school, right? That's just the Indian psychology and Indian aspiration, right? And then that, sense of economic migration going from one level of schools to the next level of schools is pretty much there throughout all the way till premium schools. Once children are in entry level private schools, the Indian family or the Indian parent is thinking, okay, can I send my kid to a,
Okay.
a national board like a CBSE school or an English medium school, right? Once they get into that, there is
Sure.
a further aspiration. Okay, can I send my kid to an international school, right? And that aspiration almost never stops, right? That's the trend that we have definitely seen across the category.
Sunit?
I think Rishabh did capture it well. Just to add on a few points there. So at Financepeer, we have been working with more than 7,000 odd institutions, majority of them not just being in the tier one cities like Mumbai, Pune, Bangalore, Hyderabad, Delhi, and so on, but there are in fact a chunk of schools, colleges, and institutions that we are working with, which come from even tier two and tier three. Correct. So the problem in the Indian context for a loan is that every time when a citizen is applying for a loan, there is a credit check. Correct? That loan can be applied even by doctors or anyone. There is a credit check, and then depending on
Okay.
that, there is an interest that they are charged for. The problem is that in
Okay.
tier two cities or in tier three cities, uh, most of the students, most of the parents, they are new to credit. That's one. Second, their spending propensity is low because they are living in a city itself where the entire consumer spend is low. So their loans, first of all, loans is a concept for them because they never get it approved. Right? They don't have their bankings in check. They don't
Yes.
have their scores in check. These people would not even have a credit card for all you know. They never have credit cards, right? They carrying a debit card itself is a luxury for them. Uh, so yes, access to finance for these folks is really important. Yes, it's not that we are doing social work. Absolutely not. There are interest charges with the institution based, but yes, the effort is going to ensure that the bottom of the pyramid, the need based segment, is what we are able to target and have more and more access for them to education.
Talking about the pandemic, has one, have the expenses increased? Has the process, the procedure, the waiting period, have all of these things also increased, exponentially because of COVID? What can you tell us?
So, see, there are two aspects that I would like to take this question on. One is,
Okay.
what's been the impact on education
Okay.
institutions in India, and the
Sure.
second is what's been the impact on the Indian
Okay.
consumer and the Indian family and the Indian student, right? For the education institutions, it's definitely been a very, it's not been a straightforward last couple of years, right? Their core activity, if there's one sector that's been completely shut out in terms of physically operating, it's been education, right? Every other sector that we look at, it's been open up, at least in some form of capacity, right? And that has definitely affected their enrollments. We have seen across institutions multiple students trying to take a gap year because they realize that online education is,
Okay.
while it's good, and definitely it's not something that they would want to take granted for, but it's definitely not a like for like replacement for in person physical education, right? So
Okay.
that has affected the enrollments and the enrollments for education institutions pretty much across the spectrum, but definitely in the lower grades, which is the pre-primary section, and the early grades, for a lot of education institutions, and to a certain degree, even the higher education universities, right? So that has been a significant strain on them. Apart from lower enrollments, they've also had major challenges with fee collection, and that's led to a lot of cash flow issues in running of these education institutions. Correspondingly, on the other side, which is the Indian family, the Indian consumer, the Indian student, right? They, obviously every household in the country has been, affected financially and medically due to the pandemic, and that has resulted in them being more conservative in terms of how they're spending money, and how they're, being in fact, how they're paying for education, and that has also led to them taking decisions, whereas to take a gap year or to take a year off from the education life cycle of a typical student, right? And that has played out very strongly, I feel. The financials of the Indian consumer have been affected, their savings have been affected for sure, right? A lot of families did end up saving for their children's education, and the uncalled for medical expenditures have caused them to take a dip into those savings. So that's been playing out. So it's not been the best 2 years for the education industry for sure. But I think now we're finally seeing signs of recovery.
How about the process of applying for and getting a loan? Has that also become more difficult since the pandemic?
Of course, there is a need for loans, so that has increased. But one thing that a common man may not understand is what is happening behind the scenes. Uh, on the positive part, of course, there are many negatives to what has happened because of COVID, but the entire sector in banking, which includes personal loans, corporate loans, infra loans, yes, maybe they have gone down, but which include education, they have all shot up. So even I think the average ticket size for HDFC has also gone 10x, correct? And that talks a lot about the market per se. So what is happening behind the scenes is that even though my 1 lakh example, if I'm putting that in the account for a savings account, and earlier I was making 8% or 9%, now I'm making 6%. So that has reduced. But what that has given the banks, and with the repo rates, what RBI has given the banks and other NBFCs and fintechs is a chance to increase their access, which basically they have given a chance to increase the risk that can be taken to give that money back to the society. So the injection of funds has increased from all the sides, right from RBI to the banking, and yes, it definitely reflects on startups or fintechs like us. So that access, there's more access and more money in the market, and yes,
Okay.
banks and RBI is helping that the people are able to get and realize it.
Sunit, Rishabh, thanks so much for your time. Completely out of time on this episode. If you have any feedback for us, do let us know. Our contact details are on your screens as we speak. Thanks for watching. Have a good night.